Hey guys, welcome to the London session recap for Tuesday the 1st of August 2023. Happy new month. August can typically be quite slow, so as the summer holidays kick in the Northern Hemisphere, the majority of, people go on summer holidays, people who work in banks, institutions, volume can typically die down and you can see more choppy conditions. So hopefully that doesn't happen. So far it's looking pretty decent. So yeah, let's just see how we go. So daily chart, we are clearly bullish. We've had the swing boss and we're currently in the swing pullback phase. We haven't yet reached our sort of main level of demand in which we are expecting that high low to form. So we can still look for quick further downside into this level and then reassess and potentially look for longs to capture that higher low. But of course, if that order flow stays bearish, then we could be coming lower, potentially to mitigate something within here, or perhaps even change trend. We have been bullish for quite some time, so nothing would surprise me. As we can see, at the start of the week, we mitigated this minor level of supply, and we're just seeing that continued bearish order flow within the pullback. So yeah, it makes sense that we're going to see further downside into towards this level of demand before we potentially see stronger bullish pressure. 4-hour chart, you can see the current swing range that we have, as this was the last break of structure there on the 4-hour chart. So our strong 4-hour swing low is actually behind that main level of daily demand that we're looking for price to potentially come into. So this is our 4-hour swing low here. So it's all lining up quite nicely, with the anticipation that potentially we'll get that daily and 4-hour swing high low in that place. Of course, there's no guarantees, but it's looking somewhat promising. So to facilitate the current 4-hour and daily swing pullback, the internal structure on the 4-hour chart, as we can see, is bearish, and we've essentially just been following that since when? Since around mid last week, and we're seeing that come to the downside. Now, we can put on our premium and discount, from the swing high to the swing low, and as soon as price pulls below the EQ, right, we can say that price is in discount prices, and there's increasing probability that swing high low is going to form on the daily and the 4-hour chart, right? And we can potentially start to anticipate that move. But remember, premium and discount is it's almost one of the weakest forms of confluence, at least, from my perspective, that I use. It's kind of just another little thing, that we're looking at. But as soon as price first dips below the EQ here, I'm not just suddenly, no longer looking at shorts and all I want to do is get long. No, of course not. It's kind of just the first little sign that we're at value. But as long as we're still seeing structure bearish, order flows bearish, supply is in control, we haven't had a strong liquidation, a sell side liquidation to the downside. We haven't really mitigated any significant higher time frame demand yet. It's kind of a random 4-hour POI, right? This is the POI that caused the break of structure. These ones are in daily demand. Until that happens, I'm more than happy to keep following this bearish order flow. Likewise, at the end of last week, we came into the list level of demand. Now, this is a bit more significant than this one. We can say we flipped something within here, but more significantly, we broke this level of 4-hour structure. It's even more in a discount, etc., etc. But that said, look at the 4-hour internal structure. It's clearly bearish still. So I'm more than happy to keep following that, especially when we have cause for lower prices, right? We've left these nice perfect equal lows for price to target, right? We know there's going to be a lot of liquidity below there, and we have this main level of daily demand as well. So there's a lot of reason for price to keep moving to the downside. So when we've had that 4-hour internal pullback on Monday, we'll just zoom into that range. What did that pullback do? It came to the EQ of this leg, so I've just marked on the premium discount of this internal range. All right, so we pull back up to the EQ. We've mitigated this larger box is that daily supply zone, that minor daily supply zone. So yeah, ideally we would have come all the way up to here, to this refined level of supply, but we don't have to do that. So now the fact that we've had that 4-hour internal pullback to premium supply, we know that daily supply in the EQ of that leg, there's an increasing probability now, especially if you see the M15 start to break to the downside, that internal pullback on the 4-hour chart is now finished, and now price is ready to target at least to this internal low. Okay, so the point I'm trying to make here is, yes, the 4-hour swing and the daily swing is bullish. Yes, we've come off, a decent level of demand to the left. We're well within the discount. So, some of you might be thinking, why are we still looking for shorts with confidence? And it's because with the more recent price action, everything is still pointing to the downside. right? The market has not shown us that demand is taking control. You can still clearly see the bearish internal structure is intact. We have cause for lower prices. We've got these equal lows to target. We have this daily unmitigated demand below. And even more simple terms, just look at the structure. We're bearish internal structure. We pulled back up to the EQ. We've mitigated daily supply. As we'll see in a minute, the M15 starts to shift bearish. So now at this point, there's a very strong possibility that this low is now going to be targeted and we're moving to the downside, okay? Now, there is a valid level of 4-hour demand here, which I have drawn, but it's not the most significant, right? Because it just about caused a bullish change of character. It's a bit messy, but it's within there. Okay, so it's just to cause a chock, but we expect price to have a bullish change of character to do what? To facilitate that internal pullback, right? So now if we think that internal pullback is complete, because we've pulled back above the EQ to mitigate daily supply, then we can say, well, it's likely this low is now weak and price is now ready to target back through here. So yes, we can look to potentially take longs from within here because there's potential we could get another leg before we go, but it's a lot lower probability. Like when you're trading counter to the internal trend, you almost want to get in straight away down here before we have the pullback, because once we pull back and price is coming down, now you're trying to buy against the objective from a weak low, and it's likely price is going to do that. Okay, now the reason why I'm kind of going over this in almost extra detail is because it can give you confidence potentially if you want to be aggressive, and conservative is a bit relative, but it can give you confidence to trade against 4-hour demand, because you can't just read every scenario the same, right? You just go, right, I never want to short against 4-hour demand, because you're going to have to weigh everything up, all the the evidence and confluence in each specific scenario, and you have to go, well, okay, what is the probability that this low is now going to hold when we're trading counter 4-hour internal, the pullback is complete against daily supply. Maybe that's a scenario in which you're willing to be a bit more aggressive and actually trade through this, right? It's not like price is coming up here and now you're trying to buy against this 4-hour supply when this is a strong internal high, right? It's in the premium of that supply range. You're not trying to buy against that, because that's a lot lower probability than shorting through this demand, because this is at a weak low. It's pro order flow, pro the internal structure. There's cause for lower prices. So you see how technically both of those would be trading against 4-hour zones, but one is higher probability than the other, right? Trading short through this demand is higher probability than trying to trade long potentially through this supply, right? Because that's a strong high, whereas this is a weak low. So hopefully that makes sense. So yesterday when the M15 was actually still bullish, at this point I viewed this as high probability to try and push higher, right? And I would still stand by that. That's the framework I'm always going to follow, because it stands as well in a large sample size of trades. But once we have this break here during Asia, well, now something's changed. We can take that message from the market, because now this low has been broken. The M15 structure has now shifted bearish. So that's a much stronger signal that 4-hour internal pullback is now over, and now price is potentially ready to target that weak 4-hour internal low, right? So that's basically, why we always try and follow structure, right? This becomes our strong zone high because this is the high that broke the low. Now, you can get more tricky with your forecast, which is, I always try and be aware of other possible scenarios so I don't get too attached to a bias. And the other scenario is that potentially the M15 only switched bearish to mitigate this 4-hour demand to then have another leg higher, right? That is always a potential, and sometimes that does happen. But if you find yourself kind of getting paralysis analysis, then just follow structures where we say, keep it simple. The M15 has now bearish. The internal structure is now bearish, right? This is the clear internal range. So now you have phase A, because M15 swing is bearish, M15 internal is bearish. So that means shorts are phase A, right? Pro swing, pro internal. And you can then look to trade from this strong internal high and follow that internal structure to the downside. But, as we know, after a swing break of structure, what can we expect? We can expect a swing pullback on this time frame. So we know that sometimes the internal structure will keep going for a little while and we can keep following it. But other times after the boss, that swing pullback will occur straight away. And we never know what will happen, whether we'll have that pullback straight away or whether we'll get another few internal breaks of structure. So it's a bit tricky. So you have to accept the risk that you can keep following shorts here with phase A, but potentially that might happen and we might have that deeper pullback. So it's down to you. Now, the fact that we were coming off this 4-hour level of demand meant that in my pre-session analysis, if I just bring this forward a few more candles to around here, I wasn't personally too keen to short from within here. Just because I thought the potential would have at least a bit of a deeper pullback. I just didn't think it was at great value. But like I said, if you want to follow phase A, it's more than valid. And also, if you want to view that this 4-hour demand isn't something that you might want to be too concerned trading against, because the 4-hour pullback is likely complete and potentially we're now ready to go. So you may not view this as that significant. Also, this level here, if we look left, we haven't come off like any refined M15 demand. So that's another reason why potentially we may be ready to go lower before we see a deeper pullback. And also, we haven't had a strong liquidation down here. We've kind of left these ascending corrective lows, which if you've seen the high and low resistance liquidity lesson, we know that means it leaves a lot of liquidity target, and typically you'll see price move down, right? Impulse, correction, impulse. That's typically how markets move. So what I'm trying to do here with a bit of this sort of expanded explanation of all of this is just to try and show you, I guess, this is the kind of the art of trading. It does get a little bit tricky, is when to be aggressive and when not to, but more so like, it's down to each individual trader, kind of when you're happy to trade against negative confluence and or when you want to wait for a bit more and wait for things to be a bit more aligned. On another day, I might have woken up with a higher risk appetite and might have thought, you know what, I'm happy to be aggressive and trade through this. And yeah, I would have bbeen interested. So you could obviously, be quite aggressive here and just take an M15 risk entry, literally just following order flow. This is basically the mitigate extreme. I'd probably still want to cover that high, and then you can get decent risk to reward towards there if you take about the 25% of the zone, or potentially try and target demand. Or you may even want to try and anticipate that, but I probably wouldn't be that confident doing that, entering so low in a leg, because at some point you're probably going to get that deeper M15 swing pullback. So that's it. I wasn't really too interested. I was looking to see if we would push up higher or see if we come lower for long. So I didn't really look at any trades this session. But if you were happy to trade from this M15 POI, then let's look to see if there are any entry models. So we've got our mitigation. Is there any strong liquidity? Well, this high has obviously broken some structure here, so we can draw on our strong liquidity point on this high here. But for us to confirm that liquidation is being used by BFIs, right, we want to see the PBL and the CHOC, which is pretty much all the way down here. So let's see how that plays out. Now price comes all the way down, but there's nothing really clear in here. You'd want to be looking at all the way at the extreme if you wanted to trade from here. So in that instance, if you had looked for, I don't actually see this in the markup, but if you had been looking at shorts from within here, then yeah, technically you could say that that's a strong liquidation that broke that low, and then prices moved up, and then there's no flip, so that would basically be your PBL down here, and then you could look for the extreme, and that would have ended up being a loss. So what I would say about that is how convincing, if you bring it back to this point here, right? If you're looking at structure, you can see price, kind of zoom out a bit. That's the largest swings in price. So, you can kind of see that would be quite clear on the M5, right? Just bullish order flow. So at that point, yes, this high did break a fractal low. But you kind of have to ask yourself is, how many people really got caught on the wrong side of the market? From that high breaking that low, how many people, would be induced to produce liquidity behind that high compared to now when this high breaks this low, right? You see how this is a lot more significant, right? It's like a clear M1 swing boss. That would probably be even valid on the M5. We'll take a look in a minute, but I'm almost certain that will be an M5 breaker structure. So now, which high between this high and this high do you think there's going to be more liquidity behind, right? That just about caused a CHOC, or this high that's caused like a boss, right? We can know there's going to be a lot more stronger liquidity behind this high. So now when you see that high get taken out, it's like an M5 liquidation. We've pushed deeper into the zone. And then you see that, boom, nice big V shape. So where's the PBL that liquidated the high? There's your demand that took out that high there. Okay, and then you've got a flip, which is basically the extreme, which makes it nice and easy to choose where you're going to enter. And that's the level there. So I think that's a pretty clean entry model. So yeah, technically there was a valid one before, because this high did technically cause a CHOC, therefore that is a strong liquidation, and then we do come down and cause the bearish CHOC here and PBL fell, so potentially you could look at shorts from within here. So that is valid, but you see how this is a much better setup because you get that clear shift in much more convincing structure. Then we get that taken out. Was this during the session? Yeah, it was. Okay, so yeah, there would have been a valid loss there, but hopefully you can see why this one is a lot stronger if you had doubts about this zone, and then that would be the trade there. But unfortunately there was no tag. Price kind of just messed around and then dropped. So at that point there was a valid M5 setup as well. So here you can see what I was talking about a lot more clearer now. You see how like these highs, they're just kind of weak M5 highs. They're not doing anything, right? That high isn't a strong high on M5. Then this high breaks this low. Okay, so now you have much stronger confidence, much stronger liquidation. And then from an M5 perspective, this would be your M5 PBL, right? That's the demand that liquidated the high. Obviously, you can draw it on the single candle, but when you see like a clear flip here, don't be afraid to kind of use that more obvious sell to buy rather than the super refined inside bar. And then that would be your M5 PBL flip there. It almost kind of mitigates the extreme, which makes it a little bit more, gives you a bit more confidence as well to enter on the flip. If you want to enter on the 25%, just to improve your risk reward a little bit. You might want to cover the high, but because you're entering quite low on the leg, it's probably not worth the risk reward at that point. So if you are going to take it, you kind of want to be a bit more aggressive with your stop there. And then if you can get, over 3R to the low is pretty decent. You might just want to target 2R, 3R, whatever, or even your 5R, or maybe even down to demand. It's totally up to you what management strategies you want to use. We're kind of just covering the entry models here. But yeah, kind of once that low breaks, that's where I'd probably consider cancelling your order, because now it's no longer a M5 confirmation entry of this POI. It's now a different M15 trade idea, because now what do we have? Now we have that kind of M15 IBOS. This is your new M15 high, probably like M15 supply here. So if you leave the order on, it's still valid, but it's rather than it kind of being a confirmation entry, it's more like a risk entry, right? Because price is coming back into the M15 POI and they're trying to get in rather than waiting for a new entry model here. So it's not to say you can't do that. It's just kind of knowing that that's sort of what you're doing, because obviously as price now pushes down deeper, reassess. You could be coming off some demand that maybe potentially you don't want to trade against, especially as now there's a straight push, there's no lid. So you, rather than leaving your order on here, you may want to see new liquidity built in the pullback. All right, so this becomes your new strong M15 internal high. There was a little M15 demand here, but we're not really going to expect that to hold. No lid, no induce, no lid, no leg inducement, didn't sweep liquidity, and price pushes straight through that. Now, I did get a question. Yes, technically you could trade a liquidity entry model for long with a sweep of that M15 low. However, I would almost never, I don't think I've ever used liquidity entry model for phase D. I can't think of an example. I mean, if someone can find one, show me. I'm pretty sure I've never done that, because liquidity entry model 4 is pretty damn aggressive, right? So typically I'm always doing that pro order flow, right? Ideally pro internal trend and pro swing trend on the M15, but pretty much always pro order flow, and this is counter everything, right? So I'm not just going to trade an M1 sweep of that low. For me, that's just way too aggressive and would have a very low strike rate. So price has put it back a bit, so this is where we can keep an eye on and see if price will pull back up to a POI, and just the exact same thing as we just looked at, just looking to follow that internal structure to see if we'll get another leg, whilst accepting the risk at any point. That M15 can start to have that larger swing pullback, or we have a deeper mitigation into 4-hour demand. But the fact we haven't quite hit M15 demand just yet, gives another cause for lower prices, right? And potentially we could keep seeing that bearish order flow until we take out that 4-hour low before having that deeper pullback. However, it was towards the end of the session. There's no lid, so you want to see strong liquidity built in a pullback, but we never actually mitigate the M15 POI. So there was an M5 strong liquidation within here, but because there was no mitigation of M15 supply, not even to the range, then for me that's not a valid entry, and risk to reward is really not in your favor, right? You're trading right into demand. So yeah, no trades, no session. It is what it is. No need to get FOMO if there was no trade there that met your plan, or even if there was an entry, but you weren't too interested in shorting from here for the reasons I explained, then it's fine, right? It's the start of a new month. It's literally the first session. There's no need to get emotional or anything about it. Like, think about how calm you are on the weekend when you're doing your pre-session analysis, you're doing your markups, you're tidying up your journal, the market's not moving, right? You feel very calm, you feel very patient. But as soon as kind of the market opens and then the market starts moving, you think it's going without you and the market owes you something, and you start thinking about how you want to make money, or need to pass a challenge or whatever. Like, it just completely throws you off balance. You start making poor decisions. You think, all these negative thoughts or whatever. Like, that's why you've got to try and keep as neutral as possible, and kind of keep in that flow state of how you feel on the weekend when the market's closed, and almost feel the same way when the market's open. There is an abundance of opportunity. You just have to capture a tiny portion of that, to be extremely profitable. So yeah, in terms of forecasts, ultimately, primary forecast will be that we'd expect this 4-hour demand to now fail. Of course, anything can happen. There's still going to be orders within here. We could get a bit bumpy. I mean, there's still potential we could do that. I think it's unlikely, but it's something we can be aware of. But yeah, for the most part, unless the M15 really shifts, I'm expecting that low to go. Hopefully we get a nice liquidation of these equal lows, and then potentially something interesting to see if we're going to get the continuation of that 4-hour and daily swing trend from within here. I don't really like this 4-hour POI. It's just sell to buy wicks, so not really that significant, but it's all of these are mitigated. So yeah, ideally what we'll see is something obvious within here, like a clear 4-hour IBOS or at least a chalk, something nice and obvious on the M15, and then let's see if we can get a continuation. If that bullish swing trend is going to continue. From an M15 perspective for New York, we have now kind of had a mitigation of this M15 demand within the 4-hour demand. So, if we are going to get that larger 4-hour move, it could happen from here. But the M15 hasn't confirmed yet. I'd want to see an M15 IBOS, which would be a break of this high. All right, so we can get like a break of this high here. That would be quite significant, as potentially then we are having the M15 swing pullback, right? Something like that before potentially we go, or maybe we're getting that deep before a pullback, who knows? We do have now this equal lows liquidation, so if price can take out that PBL, that's quite a strong sign as well that we might be seeing that more bullish pressure coming in. Otherwise, if price starts to keep doing this, I probably wouldn't be looking for sales from within here now, right? We're deep in 4-hour demand, we mitigated M15 demand. I'd probably just let price sort itself out, and wait for those clearer intentions. So yeah, hope you guys took some value from that. Hope you guys have a good week. See you next one. Cheers.